Clients will be looking around this time of year to reduce their payments on accounts. Paula, would you be able to fill us in on some of the changes or what to look out for?
Well, I was going to let Rebecca lead on this and then give you my thoughts.
Yeah, I'll set down the sort of basics. So there are payments on account due of 50% of the last year liability, 2015-16, and that's due in respect of 16-17 if the amount payable after looking at tax that's been deducted either exceeds £1,000 or 20% of the total amount due for 15-16. So that triggers off your payments on account. Now, in law, you can make a claim to reduce, and many accountants will do this either using their software or through the HMRC website. The form used to be SA303, so you can use that to reduce that liability. However, what you've got to be careful of is that it's not a declaration that the income will reduce, it's a declaration that the tax liability will reduce. And there have been some changes, haven't there, Paula?
Yes, and in particular in relation to the changes on interest relief, this is going to change people's tax liability even though their income remains unchanged. So it's watching out for that. And for people who are pushed into higher rate tax, who wouldn't have been in higher rate tax before, that's going to be an issue. But we were talking earlier about how practitioners come under a lot of pressure from clients. When they get landed with the tax bill, their first thought is, well, how can I reduce it? And they go to the payments on account. And it's making sure that if a client is asking you to assist in reducing the payments on account, that you are happy that their tax liability has indeed gone down and that you have advised them correctly. And maybe it's worth setting out in a letter to them if they're asking you to assist in reducing the payments on account, saying you have asked me to reduce your payments on account and the reason for this is XYZ because you said your employment income has gone down. Well, not your employment dividend income, but that some income has gone down, because what you don't want is this time next year that same client going, well, why did I reduce my payments on account? Why didn't you tell me at the time? And again, it's tax practitioners at this time of year, they're very hard pressed under a lot of pressure from clients, and no matter how well they've spaced out their tax return season, you know, clients will still deliver things at the last minute. Your most important clients will rock up with their things in a bag and say, well, you know, do you think you could have it done by the end of next week because I'm going away for 3 weeks? And it's very easy for things like payments on account to get left to one side. And it's making sure that you take the time now to deal with them. Bit unfair, everyone else is in the Christmas season and you're knee deep in tax returns, but that's the joys of being an accountant, isn't it?
Yeah, particularly watch out this year for the payment on account reduction, because of course you've got dividends coming into tax, basic rate dividends, never been a tax liability before. You're going to have clients, you know, down the road next year with maybe some quite major tax liabilities, and they've never paid tax before. Oh my goodness! So they'll have next year not only their tax for the on the divvies, but their payments on account for the following year. You need to take that into account. So if their income's gone down, you've got to bear in mind that that dividend tax is actually going to push the tax liability up, and therefore not reduce payments on account. Now, if you do incorrectly reduce payments on account, what will happen is when the return is filed, those payments on account will get uplifted back up to where they were. They won't go over the previous year's liability, but then there'll be interest charges on those. Now, technically, there is a penalty of up to 100% of the amount wrongly reduced. I've never seen a case appealing it, which probably means that penalty's never been levied, because if it was, people would shout about it. But it's always there, and it's there, I think, for people who just gaily go around reducing those payments without doing the work. So Paula said, get some papers on file, get something down about what the basis of it was, and at least you'll protect your client from any penalties.
And there's a first time for everything on penalties, and you don't want to be that first practitioner who's trying to appeal one of those penalties. Yeah, exactly.
Yeah.
Fantastic. Thank you, Rebecca. Thank you, Paula.
Thank you.